traders. Okay, so this week, has been a lot different to last week. So a lot quieter this week. We have not seen the volatility and the big risk-off selling that we did see the previous week. And look, US equities markets, which have been a big focus, for the market, this week really haven't done a lot. They have tried to trade in positive territory, and they have been for most of the week. But certainly, look, the sellers are still there, and they're not going away, capping topside. And so, really, essentially, why is it's pretty obvious, and it's April the 2nd, and that is when US and Trump's reciprocal tariffs come on. So basically, any country globally that's got any tariffs to the US will get reciprocal tariffs. So this is when we really get the tariff policy of the US come into full force. So there's a lot of uncertainty associated with this, and markets hate uncertainty, and because of that, it's going to be very hard for this market, difficult at the moment, to climb that wall of worry. So look, I'd suggest that we're going to continue probably in these choppy ranges. Not really going anywhere in a hurry. Look, if you're a range trader, these probably markets will suit you. Okay, look, this week was a big week though for central bank meetings. We did have quite a few of those. The first one we did have this week was the Bank of Japan. Look, there was no expectations of them to raise rates at this meeting, but what we did find out from the Bank of Japan, look, their policy rate is 0.5%. That is too low. They are coming out of deflation. The Bank of Japan does, did mention that the spring wage negotiations, the wage increases that the Japanese workers are getting, certainly are at the top end of the expectations, and certainly will underpin some wage price inflation. And look, they are ready to raise rates, but they want to see some more economic data beforehand. But certainly, look, the May meeting looks like it is a live meeting, and look, it's important. For the simple fact is that the Bank of Japan is the only central bank that will be raising rates. So I suggest that the days of selling yen certainly are over. The market now is a buy yen market, and certainly I think as we get closer to the next hike by the Bank of Japan, we could see a decent move in the yen. Could happen very quickly. Okay, we also did have a Fed meeting as well. Again, there was no change expected there with the Fed lowering rates. We do have a market that certainly is expecting Fed rate cuts this year. The market has priced in, basically they want to see 3 rate cuts by the Fed. Post the Fed meeting, that pricing in the rate market hasn't changed. They're still looking for that. The main reason, obviously, the market is looking for this is to do with slowing US growth, and that potentially, the US will go into a recession at some stage. Possibly this year, and so they do expect the Fed rate cuts on the back of that. But obviously the Fed at the moment is still concerned about, the tariff policy and what impact that's going to have on inflation. So they're in a wait and see, pause mode at the moment. But look, the market thinks that potentially they'll start cutting rates maybe around June, July, so mid-year for the Fed, so nothing anytime soon. Last night we did have the Swiss National Bank meeting, and yes, they did cut rates. So they cut rates by 25 basis points, and they now have the lowest policy rate globally amongst all central banks at 0.25%. So look, that is meaningful. If we go back to the Bank of Japan, which is the only central bank that is going to be raising rates, the Bank of Japan and the Swiss National Bank did have rates at the same level at 0.5%. Now the Swiss National Bank is below the Bank of Japan policy rate. So I'd suggest a trade on the back of that is short Swiss yen. And certainly as we see the yen appreciate as well with rate hikes with the BOJ, And even the Swiss National Bank's not finished at 0.25%. They could possibly go down to zero or even negative rates again. They have no inflation over in Switzerland, and obviously slowing growth as well. So that is something that, as a long-term trade, potentially could be a very big trade. Technically, if you have a look at the longer-term charts, the Swiss yen, it looks like it is a monster top formation, bit of a neckline at 165, gets through there. Could see some much lower levels further out in the months ahead. So, and there is a very small carry being long yen if it is expressed via a short Swiss yen position. We have talked about this before. It is working. It is a trade that I like a lot. Okay, so on Friday we don't have any event risks, no real big economic data to finish the week. So there's a good chance that we may go trading into the weekend on a quiet note. Good luck with your trades, and we'll catch back in with you next week.